Richard Calhoun, Creekside Realty, 40 years of serving the Silicon Valley buyers and sellers. Here's my contact information. We'll get back to this slide in a little bit. The handout is posted. The first slide that we'll look at looks at the two components, supply and demand, and it compares it to the 5-year median. The 5-year median that I use is 2015 through 2019. So on the inventory side is the blue line. The blue line is right on top of the yellow line. So we have exactly the normal number of inventory homes available for sale. And this homes for sale would be in Santa Clara County, San Mateo County, single family homes, condos, and townhouses. What is way out of line is the number of new offers. You can see we're almost at 160% of the new offers that were accepted. So it's the huge extra demand. And you can see the red line has been significantly above the yellow line for the entire year. And actually, not too long after we were able to show homes last year, probably sometime around Labor Day, week 33, essentially onward, you can see you had the surplus demand and it grew up at the end of the year. Now, the reason it grew so much at the end of the year is we had holidays. Holidays normally negatively impact real estate. With the pandemic, people weren't traveling as much, so the impact wasn't as great. So that brought the demand up. But you can see that its demand is shooting up here. Now, I will caution, we also have a holiday. Memorial Day this weekend. It's on the 31st. That's the latest it ever can be. And so the fact that this is up, it may be down in next week because next week would be normally after the holiday. So some of this spike up may just be the holiday effect, but clearly we've been fluctuating between 20 and 40% the entire year. So that's huge. And then the gray line is simply the number of new listings. And you can see we had a huge spike up in the number of new listings as well. And again, I think that's just the timing of the shift of the holiday from week number 20 normally to week 21 this year. Now what we're looking at is days on unsold inventory. Days on unsold inventory is the single biggest indicator. It's basically the supply-demand ratio. And the concept is the same. Here is the days of unsold inventory that we would expect based on the 5-year median. Keep in mind, 2015 through 2019 were 5 great years, and comparing it to that, we're below. But remember, days of unsold inventory is how long would it take to sell the existing inventory, and you're below, which means you're selling it quicker. So we're in a faster paced marketplace. And if you look at this historically, starting in 2020 with week 22, it basically was normal. And it was even normal all the way up to about week number 7 of this year. So we were basically having a great year, but very consistent of what we would expect from the 15 through 19 timeframe. But starting in week 8, it started to drop down and it's staying down. And also notice that normally you expect it to start to go up. And that's why prices normally level off. This year, it's still basically flat. And I thought we were getting a little increase here and it's going to start following the normal pattern, but now we've decreased. So I'm going to be real interesting to see if that decrease is just the holiday impact or not. And in Santa Clara County, we'll see it in a little bit. I was commenting that the days of unsold inventory went from 17 up to 18.9 and over, I think it was a 3 or 4 week period of time, and how that really wasn't a shift in the marketplace. It's about 5 days per week when you're shifting marketplace. It's back down to 17. Now we're looking over at the buyer side. This is the overbidding distribution for each individual week. The purple line right through here that's pretty thick is the current week. But what you basically pick up from this, the dotted lines are down here, which are the oldest lines, basically January of this year, we were the slowest. Then February and March, you were these dashed lines and the market was basically improving. And now that you're into April and May, the market's sort of pretty strong and staying fairly consistent. It bounces a little bit from week to week as you would expect with any real live database, but it's there. And the two extremes are our best month ever, April 2018, and our worst month ever, December 2001. Then here is the appreciation. I may start putting this into a chart now that I'm starting to get a lot of data. But the key takeaway is notice Santa Clara County single family homes. I'm only doing this for single family homes in the different micromarket areas. Santa Clara County is obviously the largest area, so it's normally pretty stable. And you can see that every week it basically went up about 0.75%. Now we actually went down a little bit. And yes, there was 1 week back here where we were flat, but in general, it was clearly climbing from 14% appreciation to 15, et cetera, all the way up to 19 and now down to 8.6. The other areas fluctuate a lot more because there's fewer data points, but you can see that in general, the trend is leveling off. There's some exceptions. Saratoga Las Gatos jumped up to 31%. It's just a fluke of what houses happen to sell. Foster City fluctuates a lot because it's a very small database. And that's why I'm sort of focused on Santa Clara County, the entire county, and the fact that it's leveling off. What are the prices that I'm comparing it to? I took the median price for all of calendar year 2020, and also just to give you some idea where the median close of escrow is in this other column. So basically the first week in August. So instead of it being July 1st, it's delayed a little bit to the first week of August. So basically, in a nutshell, you can say we've had somewhere around 19% appreciation since the first week of August of 2020, which is a pretty phenomenal rate of inflation, especially if you annualize it. But keep in mind that most of the appreciation that does happen in Santa Clara County happens in the first quarter. So you're not going to get double that appreciation. We're not going to see 38% appreciation. Now we're back to the first slide. Just a quick recap. The handout is posted if anyone wants to download it. The YouTube channel is the base URL, which is highlighted in green. You add 2021 to get to the live meeting. You add the word handout, the 8-digit month, the year, month, date code to get the handout for each session and to get to the specific when you do that. I'll pause and see if anyone has any questions before I go into more details. Okay, I'll go on to the details. Now what we're looking at is active listings in the different counties and the different types of properties. So you have San Mateo County and Santa Clara County, you have single family homes, and then you have condos and townhouses grouped together. A lot of people put everything into one blender, and that's what we were looking earlier. That's what I call macro data. I was doing that just to get a sense of what was happening to the marketplace. Normally, I'm a strong advocate of not doing that because that product doesn't exist, that blended product. So I think it's important to look at them, looking at single families and then condos and townhouses separately. I would actually like to look at condos and townhouses separately, but there's not enough of either one of them to do that. On the active inventory, my definition of active inventory is what's available without an underlying contract. Many people, including the multiple listing service, count what's in escrow if this listing agent's asking for backup offers. That property is not available, and I don't think it should be counted. And it actually gives misleading information, especially at the beginning part of the year when you come out with so little inventory. You have so many new buyers, sellers coming on the marketplace. Your pending transactions with backup offers is increasing, so your available inventory is increasing according to them, where my number is actually going down. And that's, to me, the reason I started doing this was to get accurate data. So you have the current week and the previous week. You can see there's really not much change. Overall, we went down 100 listings. Going into the holiday, that isn't a surprise. When we get down to offers, instead of looking at current and the previous week, I'm looking at 1 week worth of data and 5 weeks worth of data. I'm looking at 1 week's worth of data to try to see current changes. The 5 week is, how are we doing overall? So you can see that you had in San Mateo County 114 homes sell in the last week. If you multiply it by 5, that would be 570 homes. And so you're at 620. So we've had fewer homes sell in San Mateo County in the last week than you would expect. Now, if you go over to Santa Clara County, it's slightly the other way, because if you multiply this by 5, you're at 1640 or something around that area. So you have 100 fewer homes over the 5 weeks. So there was more single family homes in Santa Clara County in the last week than there was over the last 5. And you can do the same thing for condos and townhouses. You multiply this by 5 and you're about 250, multiply this by 5 and you're around 750. So they're roughly in the same order. And to give you some concept, days of unsold inventory, the bottom line gives you the speed, and it's already doing the math for you. So you can see in Santa Clara County, looking at just the last week, we would have sold everything out in 16.2 days. Now, last week, that was at up to 18.9, or maybe it was the red number that was 18.9. One of the two was 18.9. But the red number is over 5 weeks is at 17. So the fact that you were at 18.9 and now you're at 17 indicates that the market's faster. Well, the market's faster, which is why it was at 16. So that's why there's more stability in the 5 week. It sort of averages out. You can see that this is the fastest marketplace. Single family homes in San Mateo County is sort of in second place at 22, but that's tied with condos and townhouses in Santa Clara County, and lagging behind is San Mateo County condos and townhouses townhouses. Now, it is interesting to note that condos and townhouses are finally picking up. They had been lagging behind, and it's my belief that people were pushing from condos and townhouses into single family because of the pandemic. Maybe people are sensing the pandemic is over and they can start living back in townhouses, or maybe it's simply they're priced out of a house and they're willing now to take a townhouse or a condo. But anyway, they are starting to now do better and roughly the same as single family. This is looking at days of unsold inventory over time. So this is when the COVID hit us and we had shelter in place, and you can see the huge slowdown that had in days of unsold inventory as a result of that change. This distribution right here, disturbance, is the holiday. You can see last year, so that's fairly consistent. This is a bad data point, so don't worry about that. And you can see right here, all three were starting to slow down, and then in the last week, they turned around and started a nosedive. I believe that's just a result of the holiday. 2 weeks from now, I think what we'll see is days of unsold inventory going up a little bit. We're not going to see any rapid increase like this. I think what we'll be seeing is sort of a normal trend upwards that we typically would be seeing at that time of the year. Now what we're looking at is single family homes only. We're looking at the different micro market areas based on zip codes. This is the actual number, but essentially the redder the color, the faster the marketplace, the paler the color, the slower the marketplace. I actually go to blue, but there is no blue on here. The closest we have is the expensive areas in Menlo Park, Atherton, and they're the balance market at 41 days. So they have a little hint of red to them because there's no color from 42.5 days to 77.5 days. But you can look and see right now the San Mateo County based cities is pretty strong at 10.3. Cupertino Sunnyvale is pretty strong at 9.3. I will point out that at 10 it's saturated red, so there's really no difference between those two areas, even though Cupertino Sunnyvale is a little faster. So that's sort of the general concept. You can see that South County is a fairly middle range pink, and it's sitting here at 27 days of unsold inventory. But that gives you a concept of if you're considering different areas, which ones are going to be more aggressive. This is now looking at just total inventory, raw data. Where is it compared to the normal? So the median is the yellow. That's where you'd expect inventory. The blue is where we are. So we're right there. And this is back to the macro data. So for everybody that's screaming that we have a lack of inventory, we don't have a lack of inventory. We have absolutely normal inventory. We have a surplus in demand. Two different issues may have potentially different solutions, but everybody's focused on the lack of inventory, which doesn't exist. Now, if you wanted to look at the components like single family homes in Santa Clara County, yes, that would probably be a lack of it. And part of the reason why it becomes okay is San Mateo County is a little slower. The condos and townhouses are a little bit slower. All those count as units when you're looking at the macro data, and it brings it back up. Any one micro market area could have a surplus or less. And this is the number of new listings. So you can see the blue line, the current data has been basically above where you'd expect. So we've actually had more sellers coming on the marketplace than we've had from the 2015 through 2019 timeframe. Again, the problem is we've had more buyers, and you can see that graphically. You can see how much vertical separation there is here, and it's basically growing. It started off back here, and if you go back to the pandemic, which is getting erased, we actually had fewer demands than we normally do. Then it came up and it was balanced, and then it just started growing, and it continues to grow, and it's getting bigger and bigger and bigger. That's incredible when you think about it. This is now flipping over to the frequency of overbidding. Again, this is macro data. This is how often are sellers getting more than their asking price, and they're basically at 80%. That's right in the range of the max we've ever seen. I think San Mateo County hit like 84 or 85%, but I think Santa Clara County 80% is just about where it is. But this is blended data. Condos and townhouses tend to lag behind. I don't have long-term blended data since until COVID. I wasn't tracking blended data because I don't believe in blended data. Now you're looking at the individual components, and you can see here Santa Clara County is now at somewhere around 83%. San Mateo County single family homes is somewhere around 75%, and condos and townhouses in Santa Clara County is not far behind at about 74%. I picked those three because they're the biggest micro market areas. By the time you start getting into San Mateo County, they get to be a pretty small set, and it becomes statistically insignificant, and you get a lot of bounce. You can see how much bounce there there is already in the lines, but you can clearly see the trends. Now we're looking at the frequency geographically, same concept. The redder the color, like Cupertino, Sunnyvale, the more overbidding there is, and you're at 96.5%. The numbers are up here are all right, but I go saturated red at around 95%, which is why that didn't surprise me, but the rest of these numbers don't make any sense. So Cupertino, Sunnyvale's clearly the strongest at 96.5%, followed by North San Mateo County at 90.8%. Then it looks like we start getting pretty close. We have actually up here North Valley, Milpitas, Berryessa at 88.6%. So you can just see the intensity of the red. I'm picking up that this is a lighter shade than right here in Sunnyvale. It is a darker shade than Central San Jose. So you can start seeing the nuances in the color. And here's the magnitude of overbidding. This is how much above asking price the buyers are bidding on their offers. And you can see we're about 108%. We were at 112%, so we're not at a record. But again, this is blended data that I don't have. The other thing I'll say is anytime you have a market insult, the buyers tend to be more hesitant on how much they overbid. They overbid just as frequently, but not as much. And here is, and you can see this is what I had on the previous slide, these numbers. So it is correct for this slide. This is the magnitude they overbid. So here, the deeper the red, which is pretty, again, Cupertino, Sunnyvale at 116%. It's not quite saturated red because that happens at 117%. Next looks like it's North San Mateo at 114%, then 112, and then a couple coming in at 111%. So again, you can see where it is. I find it interesting that South County historically hasn't been used to overbidding, and they're starting to catch on to the program pretty rapidly. We did do this graph. I did showing it up just again for a second time because I'm going to go into a little bit more detail in the next slide. But you can see the trend in the upward and to the right direction is an improving marketplace. It's saying a greater percentage of the sellers are getting a greater amount of overbidding. But you're somewhere typically, have always been between the dotted red line and the dotted blue line. Those are the best and worst months. And you can see that we're getting more towards the red line, which is all a strong indication we have a great marketplace. There is a huge annual cycle, which is why looking at the linear graph, the one line graph, gives you an idea. Now what I've done is I've dropped it down to just 12 weeks. So you can see the purple line a little bit better. That's the current week. But you can see that, the light yellow line or light orange line is here is April of 10. The gray line is April of 17. And April 24th is the dark brown line. So right now, if I was to call it, I would probably say that April 24th was the peak of the marketplace. But frankly, these four are all the same. And then I would, even though they don't look like dashed, this blue, light blue, dark blue, green, and brown are the next group. And they're supposed to be all dashed lines. You can see there's an occasional break in the lines. And they're the next hottest marketplace. And then back here in the end of February, first week in March, that's scattered here. So you can see that as time progressed and you go from the dotted lines to the dashed lines to the solid lines, you've been improving because more sellers, you're getting a greater percentage over their asking price. Now what this is doing is trying to take care of that seasonal cycle I talked about. So now we're changing just to single family homes, just in Santa Clara County. We're looking at May. If you know my data, we start on May 1st and we go for 35 days. So I can't possibly have this data. So the purple line is the current data, but instead of being May's data, it's May 1st to present day, which is through midnight last night. So it's as close as you can get to real time. So you can see that we're having the second best May that we've ever had. Now, last week it was a little bit higher, and I actually thought there was no reason that it would be dependent on what part of the month it closed in, and I still believe that. And I was sort of speculating we may get closer to 2018, but instead we went the other way and got further away. And at this point, I don't think there's any chance that we'll catch 2018 because there's only a week left to get data. We only go until June the 4th because there's 31 days in May. We actually go through June 4th. Now what we're doing is we're trying to give people an idea of what the price range is in the different micro market areas. So the color coding is based on the median, which is the middle number. And that's typically what most people follow and the only number they follow. I've added in the 10% percentile and the 90th percentile. So you can see that 80% of the homes in South County are between 850,000 and 1.7 million. And you can do that for any area. For example, in the Berryessa Milpitas, which is the affordable area of the low moderate area. The affordable area is actually East San Jose, Central San Jose, and South San Jose, and that's strictly based on price. This is the low moderate area. You can see it goes from 1.1 million to 1.7 million. The high moderate is Santa Clara, Campbell. It goes from 1.3 to 2.3. So you can start seeing the range. Cupertino, that's the hottest, is going from 1.7 to 2.9. This again is Santa Clara County single family homes only. It gives you some idea going back in history. You have to be a little careful on this. A lot of the data is directly comparable, but when you look at something like closings are only going to be the number of closings from May 1st to present day. So when you're comparing that to last year, that was May 1st all the way through June 4th, and we're still double that. And what's noteworthy is at 1349, you got to come all the way back here. And the only year that I think is going to end up beating us out is 2004. So way up here, 2004. There's a 2006 here, but that's just a coincidence of how many there were. So I'm maintaining, I don't think we're going to get to 1640 in the next week, but I do believe we will pass 1419 and 1418. So anything that is quantity, you have to be careful because we don't have the same number of days. The same thing is going to be true for sales, except sales are so important. I did adjust that for 35 days. So this is how many sales we had. But if you come back here and look at it, there were actually more sales in 12 and then again in 2005, 2004, 2003. So there's been more offers accepted, but we look like we're on track to close more transactions than we ever had. And that brings us to a recap. So I'll put up the URL slide and see if anybody's got any questions for me. Not seeing anyone with any questions. I will call it a week and have a good week, everybody. Take care.